Pakistan's economic troubles may have just taken another major hit. According to reports, China has refused Pakistan's request to waive nearly 170 billion Pakistani rupees in late payment surcharge claims linked to Chinese-backed power projects. The decision has left Islamabad scrambling for alternatives, with the government now reportedly seeking a $10 billion financial lifeline, including low-interest funding from Saudi Arabia. The dispute revolves around power plants established under the China-Pakistan Economic Corridor, or CPEC, one of the flagship projects of China's Belt and Road Initiative. Over the years, these projects have helped expand Pakistan's energy capacity, but they have also created massive financial obligations that Islamabad is now struggling to meet. Pakistan currently owes around 423 billion Pakistani rupees to 18 Chinese power plants operating under CPEC. As the country's power sector debt continues to rise, Pakistani officials reportedly asked Chinese companies to ease the burden by changing contractual terms and waiving approximately 170 billion Pakistani rupees in accumulated late payment surcharge claims. But those requests were rejected. Chinese companies reportedly declined both the contract revisions and the surcharge waiver, leaving Pakistan with limited options to reduce its financial liabilities. The decision has further exposed the country's dependence on external financing and highlighted the growing pressure on its already fragile economy. With negotiations yielding little relief, Islamabad is now looking elsewhere. According to the report, Pakistan is attempting to secure up to $10 billion in low-cost foreign financing to refinance expensive Chinese energy debt. Saudi Arabia is among the countries being approached for bilateral loans that could carry interest rates of around 1%. Officials believe replacing costly debt with cheaper financing could help lower electricity prices and ease pressure on consumers and businesses. At the same time, Pakistan's government is also seeking approval to revive a 1.25 trillion Pakistani rupee banking facility aimed at tackling the country's long-running circular debt crisis, which has repeatedly undermined the financial health of the power sector. Energy debt has become one of Pakistan's biggest economic challenges. Experts warn that if the situation remains unresolved, consumers could ultimately bear billions of dollars in costs over the coming years through higher electricity tariffs and increased public debt. The dispute also raises broader questions about the long-term financial sustainability of infrastructure projects financed through external borrowing. For China, the refusal to waive the surcharge signals that commercial commitments under CPEC will continue to be enforced despite Pakistan's financial difficulties. For Islamabad, however, it represents yet another obstacle as the government struggles to stabilize its economy, maintain investor confidence, and meet obligations to international lenders. The episode also underscores Pakistan's balancing act between maintaining its strategic partnership with China while seeking fresh financial support from Gulf nations and other international partners. Whether Pakistan succeeds in securing the $10 billion lifeline remains to be seen. But one thing is certain, the country's debt crisis is far from over, and the outcome of these negotiations could have major consequences for Pakistan's economy, electricity sector, and future relationship with its largest infrastructure investor.
If you like this video, then like, share and subscribe to Mirror Now.